Okay, so recently I've been looking into this ICC slash CCT strategy. ICC was originally created by Trades by Sai, and then this guy called Cramson Capital turned it into his own strategy and called it CCT, Candle Continuation Theory, and this is his scalping strategy. I thought it looked pretty interesting, so I learnt it and then back tested it yesterday and saw some pretty impressive results. So I back tested London and New York sessions for Thursday, 18th of December, yesterday, and on NQ we got a 6.7 R, and on gold there was a plus 4.3 R, so a total of 11 R in one day. 8 wins, 3 losses, 73% win rate. So pretty impressive, and even other people who test it seem to get pretty similar results. Very high win rate with a very high risk reward. So in this video I'll go over the strategy as well as all the trades that I back tested. And all right, where is okay? So if you want a full breakdown of the strategy, I'd recommend checking out Cramson Capital's YouTube channel. I'm going to assume you already have a decent understanding of trading and maybe even the CCT theory. But essentially what we're looking for is on our higher time frame, which is the hourly, what we want to look for is, so we want to start with some wicks. I call them virgin wicks. I don't know what else you call them, but essentially you want some wicks that have not been ran through, that have not been touched, okay? So virgin wicks. And then you're looking for a massive dildo candle to close through those wicks, okay? So notice how the close of this candle closes through these wicks, right? So then these wicks now become your POI, or point of interest, as Cramson likes to call it. So what I do is I mark out these levels with a horizontal line, okay? So now these two are your point of interest lines. And so then you wait for this candle to close, and then the next one, what you want to see is, you want to see a wick come down and touch either one of these POIs, close underneath it, and then price shoot back up. And you want to enter your position, your long position, on this wick when it engages with the POI. And what it looks like on the lower time frame, so your hourly is your high time frame analysis, and then once you've got your POIs, your points of interest, you want to go down to the lower time frame, which is the 1 minute. And so what you want to see is price will come down into one of your POIs, right? Let's say it's this one. You want to see price close underneath this POI and then close back above it. And then that's when you enter your long position, targeting this high. So this would be where you enter, stop underneath that low, bang, there you go, there's your trade. Or alternatively, since there are two POIs, price could go down here, close beneath this lower POI, and then close back above. And you would enter on confirmation of closing back above. But we'll go through a bunch of examples so it'll make more sense. And yeah, you're targeting that high. And so that is essentially what it looks like, okay? And yeah, so now we'll go through some examples. I'll go through NQ first and then gold. And I'll show you how we managed to get 11R in one day, 8 wins, 3 losses. These are just like back testing. I do have a funded account that I'm going to start live trading this on starting today. And I will continually update my progress on how that goes. But for now, let's get rid of these. Okay, so let's go back to yesterday, starting at London. So I'm just doing London and New York because these periods have the most volume, the most volatility, and the highest percentage to get a successful trade. Asia just doesn't have much volatility or volume. Plus, with my current situation, I can trade both London and New York, so it makes sense for me to test these. So we'll go back to the start of London yesterday. So we start on the 1 hour. Okay, boom. All right, we get a massive dildo. So what we want to look for after this close is mark out our POIs. So look for any virgin wicks that just got ran through. Okay, so like this one, for example, it had not been touched before. So then we mark that out. I use Alt-H to create a horizontal line. This one as well, this wick had not been touched before that. So that is also a POI. And this one here had not been touched before, so that is also a virgin POI. And that is it. So we've got our 3 POIs. Then, I don't see other people do this, but what I like to do is I put a vertical line at the next hour, just so I know, okay, after this 2 a.m. candle closes, I can start looking for positions at 3 a.m. So then we drop down to the 1 minute. Okay, there, candle closes, and then now, since we've got our POIs, we just want to see price close under and then back above, and that will be our entry. I've already did my back test, so there's my, okay. So here we can see, price went back down, it closed underneath the POI, okay, that's step 1, and then the next step for our entry is, so there's a couple ways to enter. One is an inverse fair value gap, which is why I've got these boxes here, because I've got a fair value gap indicator, because an inverse fair value gap is one of the entry methods. So we can see here, there is a fair value gap here, and this candle here closes through that fair value gap, giving us an inverse fair value gap entry. So that would be where you enter the first moment. Stop at the low, targeting most recent high, 1.4 hour. Oh shit. Bang, hits TP in a few minutes, done. Nice and easy. All right, so that trade's done. Then go back to the hourly and look at the next hour. Get rid of these lines. And we start again. Okay, so we can see the 3 o'clock candle, again, displaced through another virgin wick. So this wick had not been touched before this. So we mark that out as a POI. Any others? No, I don't see any others. Okay, so let me just get rid of this. Then again, we mark out our vertical line. So we know, okay, after this 3 o'clock candle closes, we can start looking for positions at 4 o'clock. Drop down to the 1 minute. So we wait for price to cross over to the 4 o'clock candle. Bang, okay, now we're looking for price to drop under and then close back above the POI. There, we go under, and then there we close back above with what I like to call a single candle CISD, so it's CISD, change in state of delivery. If you know ICT concepts, you will know what a CISD is. But usually a CISD requires you to close above all consecutive candles. So like you would have to close above this one. But with this strategy, I feel like you can be more aggressive with your entries. So the way I'm approaching it is you only need to assist the one candle, the most recent candle that broke through the POI. So in this case, our purple candle closes above the opening of the candle that took us down the POI. And for me, that is a trigger to enter. Stop at the low, and then you're targeting these most recent highs for 1.6R. Let's see how it goes. Oh. Pretty sure we get stopped out. Yeah, so that happens. Maybe a safer entry could have been to wait for this inverse fair value gap, but this is just how I'm trading it. But this is actually very common. There will be multiple times where price might give you an entry at a POI, you get stopped out, and then the second or maybe even the third entry will give you that successful trade. So as we'll see here, we get stopped out, and then we get another entry when we close above this fair value gap. See this fair value gap here? Let me move this. There's a fair value gap here, all right? And price finding closes above it here. So that is your entry. And then stop at the most recent low, targeting those same highs for 2.38R. Boom, TP. Cool, that's done. And then back to the hourly to look for the next trade. Get rid of these lines. We can see again, we get another close above a virgin wick. So you mark that out, mark out the next hour to look for our entries, drop down to the 1 minute. Patiently waiting. Okay, so we get a close under. Now we're looking for a close back above. There you go, bang. So we close above the open of the candle that took us down. Okay, this one. So then we would enter on the close of this candle, stop at the low, targeting these highs. I think we got stopped out, yep. But again, you might get another chance, and bang, there you go. See, we inverse this fair value gap here. All right, we finally close above it here. So that would be your entry, stop at the low, targeting those highs. Boom, there you go, that's 1.6R. Yeah, so you'll see a lot, sometimes it takes 2 goes to get the trade, and yeah, it seems like the inverse fair value gap entry is higher probability than the SysD, but that's why we test to get this data. So back to the hourly, get rid of these lines. So it looks like this one does close above this wick, but it's not a very strong close, so I don't believe there will be an entry. Oh wait, no, there is, but I would not consider this as a trade because there is no target to aim for. If you scroll to the left, it's just straight up. There isn't a draw on liquidity, so see, as you watch, price just chops up and back, up and down the POI because there's no target to reach for. So yeah, I would not take that trade. Then go back to the hourly. We get this massive dildo, huge close above all these wicks. So these are your POIs. This one had not been touched before. These all did. And this wick had not been touched before. So at the next candle, you can start looking for an entry. Put our marker there, drop down to the 1 minute. So we're looking for price to go underneath the POIs and then back above, but no, it looks like no entry. No entry. Let's move on to the next hour. Looks like there is a trade, okay. So 10 o'clock candle, we do get a close above this wick. and this wick actually. See? So there's two POIs. Okay, let's mark our vertical line. Drop down to the 1 minute. Drop down to 1 minute. Huh, what is going on? Wait, was there a trade here actually? Okay, 9 o'clock candle closed. Mark that. Mark this POI. Ah, that's right. Yeah, so there was a trade here as well because this was the POI created from the 9 o'clock candle. We went underneath it. We did go pretty deep into it. So that is a low probability trade. Ideally, we want to see it a quick move in and then a quick move out. But nonetheless, this is still a valid trade. As soon as we closed back above, there is your change in state of delivery. Enter there. Yeah, it's tough when you have these deep retracements because you don't want to put your stop all the way down there. So what you can do is just put at the most recent wick, targeting these highs, and that's 1.6R. All right, on to the next hour. Yep, so the 10 o'clock candle closes, mark our POI there, and there. Vertical line there. Drop down to the 1 minute. Nothing there. Nothing there. Looks like there is a short coming up. Next hour. Ah, there we go. So we get a massive dildo. Our first short example actually. So we get a massive close down through this wick. Okay, so there's your POI. Here, you want to mark a vertical line at the next hour to look for your entry. Drop down to the 1 minute. Okay, so we want to look for price to go above and then below the POI so we can enter. Looks like it's coming. There you go, bang. Price closes above the POI and then we get a change in state of delivery there. So that would be your entry right there. Stop at the high and then targeting this wick here for 2.5R. And I think we get stopped out. Yeah. But we do get another entry here, exactly. So we get another strong close down through all these candles that went above the POI. So this would be your entry because, so where did the run up start? I would say the run up started here, right? So we want to see a close through the lowest open. So there, bang, there's your entry. We get a close below there, there's your change in state of delivery. Stop at the high, and I wouldn't target these lows just because of the risk to reward ratio. Yeah, you can target that for 2.75R. Takes a while, but bang, there you go. And that is the last trade for the day, for yesterday on NQ. And that gives you, let me check, what was it? Yeah, 6.7R all up. And I'll just quickly do gold as well, just so you have a better understanding of how the model works. And you can see the actual results. All right, let's go back to Thursday. Where is London? Okay, let's start here. Bang, nice close. Close through this virgin wick. This virgin wick had not been touched, and yeah, that's it, those two. So these are your POIs. Make a vertical line at the next hour. So from 4 o'clock, we are looking for price to go back above the POIs and then back underneath for shorts. So here we do get a close above our first POI, but there's no entry model yet. There is no inverse fair value gap and no change in state of delivery. Ah, there we go. So yeah, look, it's a bit, it's not super clean, but there is an inverse fair value gap here. As you can see, price closed below this fair value gap. All right, see, price closed there. So there is your entry. That's where you would enter, put your stop at the high, targeting this wick here for your TP. And that gives you 2R in the bag right there. Then on to the next hour. Nothing there. Nothing there, next hour. Nothing there, next hour. Okay, strong close. We close through this wick and this wick. So these are your POIs where we are looking for shorts. Drop down to the 1 hour. Yeah, so this one's kind of weird because yes, we went back over the POI, but it was right on the open. We went pretty deep into it, and then we inversed the fair value gap, but we are still above the POI. So then on this candle here, we finally got that change in state of delivery. So that's where your entry would be, and you would put your stop at the high, and you're targeting these lows. So it's only a 1.1 R, not the cleanest, but you do get it. You do get it. So it's a clean, not very clean 1 R trade short. Okay, all right, and then on to the next hour. We get a massive dildo. Closing through this virgin wick, this virgin wick, this virgin wick, and that's it. We don't close through this one. So there's your 3 POIs. So in the next hour, we want to look for a long. Okay, so bang, we have crossed the hour. Now we can look for longs if we get engagement through the POI. No entry yet. Okay, so there's your first entry because this candle, this black candle, closed through the lowest POI, and then the next candle immediately closed above the open of that candle there. So there's your change in state of delivery. You can enter along there, stop just below the lows, targeting most recent swing high. Shocking, stopped out. But we do get another chance, I believe. Yeah, so at this point, you get a strong close back above the POI, and we do close above this candle, which took us below this POI. So there's your change in state of delivery. There's your entry. Stop at this most recent wick. I wouldn't want to go down there because you get a bad RR, and then targeting that same high for 2.3 R. And let's see, takes a while, but eventually we do get it. There you go. Was there any more? That might have been it. Get rid of our lines. Back to the hourly. Let's see. Okay. Huge candle there. Close through a bunch of wicks. Wow. It's a lot of POIs. There's a lot of POIs actually. And let's see if we actually touch any of them. We ran through them. That might make a recovery. When it takes this long, the chances become less and less of a high probability trade. So, actually may have been a short opportunity. So if we look at this 12 o'clock candle, huge close down, created this POI where we could have looked for a short. So we could have started looking for shorts at 1 p.m. Let's see. Okay, 1 p.m. We do close back above, and we do get a change in state of delivery. Okay, I missed this one in my initial backtesting, but let's see. This is what I would take, yeah. Something like that to stop there. No, wicked out. Okay, so that's -1R. Huh, looks like you actually get it on the second try. So price goes back above the POI, and then we get an inverse fair value gap here. Right, there's your fair value gap. Yeah, inverse it there, stop at the high. Honestly, I think I would target these lows. Yeah, 1R, not bad. Okay, so you pretty much make up that loss. And I believe that was it for the day. Yeah, kind of just chopping. That's the end of the day. Yeah, so results are still the same. Those are all the trades. And yeah, so that actually would have been 9 wins, 4 losses, whatever that equals up to. Not 73, but close enough. I'll just do the maths. 9 divided by 13. What's that? 69%. Oh, nice. Yeah, still 69%, 9 wins, 4 losses in a day. London and New York sessions on the 1 hour, 1 minute time frame scalping strategy using CCT. I'm gonna start trading this live, as in like with my funded account, starting today, and I'll also still continue to backtest London and New York session, backtesting every trade and sharing, documenting what I find on this channel. So subscribe if you want to see more. Cheers.